Hey everyone, and welcome. Today we're going to do something a little different. We're taking a single day in the stock market, September 9th, 2025, and putting it right under the microscope. We're going to look past those big, flashy numbers you see on the news and really dig into the story hiding just beneath the surface. So you see the headlines, right? The market rallied, everything's great. But if you scratch just a tiny bit deeper, you find a much more complicated picture. So why is it that the numbers can look so good, but some of the smartest people in the room are starting to sound the alarm? That's the big question we're going to unpack right now. Okay, so let's start where everybody else does, with that one single number that probably led the evening news. And there it is. On this particular day, the Sensex closed up a solid 314 points, landing it pretty comfortably over that 81,000 mark. Now, by any normal measure, that is a good day, a really positive day. If you only saw this number, you'd probably walk away thinking everything in the market is just fantastic. But, as you're about to see, that's not quite the whole story.
To really get a feel for what's going on, you've got to look under the hood at the different engines that power the market, the sectors. And this right here is where our simple happy story starts to get a whole lot more interesting.
And wow, you can see that contrast immediately. It's like a tale of two completely different markets on the same day. On one side, you've got the IT sector, just firing on all cylinders. Stocks like Infosys and Wipro were some of the biggest gainers, and a lot of that was fueled by optimism about potential buybacks. But then you look over at the auto sector, and it was hitting the brakes hard. Experts over at Geojit Investments pointed out that investors were just cashing in, taking their profits after a nice rally. So here's the key. The main index was up, but believe me, not everyone was celebrating. All right, so beyond the big index number and even the sectors, there are these other little data points that kind of whisper secrets about what the market is really thinking. So let's peel back one more layer.
Get this. More than 130 stocks on the BSE hit their 52-week highs. And we're not talking about obscure companies here. We're talking about huge names like Eicher Motors and Maruti Suzuki. Now, this suggests that there's a broad sense of confidence out there, right? Investors are pushing individual stocks to new peaks, even while the auto sector as a whole was under pressure. A really fascinating contradiction, isn't it?
But here's the thing. While all of us were watching these individual stocks hit new highs, the big institutional players, they were making some very strategic moves in the background. This is a whole different level of market activity that most of us never, ever get to see.
And here's just a little peek into that hidden world from the day before. The name to notice here is Goldman Sachs. Look at that. They were involved in these huge block deals, which are basically massive private trades across major companies like Reliance, Bharti Airtel, and Hero MotoCorp. This is not small-time investing, folks. This is big, coordinated money-making moves, and it adds a whole other layer of complexity to the day's story.
So with all this conflicting data flying around, what were the professionals saying? The analysts who study this stuff day in and day out? Well, this is where the story gets even more divided.
There was, for sure, a lot of optimism out there. You had ICICI Securities giving a buy call on Ujjivan Small Finance Bank. Mirae Asset was recommending Apollo Apollo tubes, and they were pointing to something called a flag pattern breakout, which is basically a technical signal that gets traders really excited about a potential price jump. So on a stock-by-stock basis, a lot of the stories looked pretty strong.
And then you see this, a direct quote from a technical report by Axis Direct on the very same day. They looked at the overall market chart and they didn't see strength. They saw a warning sign. They saw selling pressure. So how is that possible? How can individual stocks look so great while the overall market chart is flashing red?
Okay, let's quickly break down that term, bearish candle. It sounds super technical, but the idea is actually really simple. Think of the day as a battle. That long upper shadow they mentioned means that at some point the buyers were winning. They pushed prices way, way up. But they couldn't hold that ground. The sellers came storming back, took control, and pushed the price all the way back down by the end of the day. It's a picture of a hidden struggle that big plus 314 headline number completely misses.
So, what on earth do we do with all this? We've got a rising headline, sectors going in opposite directions, and analysts who seem to be looking at two completely different markets. Let's try to boil this down into a simple framework you can use.
Here's how you can make sense of a day like this, and really any day in the market. First, always look beyond that one big headline number. Second, follow the stories happening within the different sectors. That's where you're going to find the real drama and divergence. And finally, you have to get comfortable weighing conflicting signals. It is totally normal for the long-term story for some stocks to look great, while the short-term market chart is flashing a big warning sign.
Which really brings us to our final thought here. A market day isn't a single headline. It's a collection of thousands of competing stories. It's this constant tug of war between optimism and fear, between long-term belief and short-term panic. So the next time you see a big green number on the news, just ask yourself, in a market full of mixed signals, where's the real story? Thanks for tuning in.